of pandemic disruption, and the backbeaten World Economic Forum is back, running from January 16 to 20th. This time will be different, however. War, disease, and surging inflation made up the billionaire guest list decidedly different. The global upheaval reshaped fortunes and shifted centers of power amid. Right now, around 116 billionaires will attend, and it's even 40% more than a decade ago. That means that the organization becoming stronger and stronger. This time, the absent will be Russians, and they are known from China, as the nation is still reeling from a spike in COVID cases. But Jamie Dimon, Larry Fink, Steven Schwartzman, CEO of Blackstone, to name a few, are the names that are about to attend this year and set maybe the new world order. What those speeches will bring to us, we don't know yet. We are through with some, but definitely there are much more to appear, and if any of them will have an importance, will let you know. In the meanwhile, Bitcoin has been overbought to the largest extent since 2 years. So what does it mean for us? What does it mean for investors? Welcome to next episode of Blockrevision. Today, I decided to re-update our episode of yesterday, as there were some interruptions. That's why we are refreshing some elements and broadcasting this live. So I'm very glad to host you here. Let's begin. And the first topic of today is at Economy View, the World Economic Forum. So let's find out what's right there at the weforum.org. That's the official website of the World Economic Forum. Citation is as following. WEF is guided by a board of trustees, exceptional individuals who act as guardians of its mission and values and oversee the forum's work in promoting true global citizenship. What does it mean? I don't really know. It's all sounds like high words that have persuasive power. It's about manipulation to making the strong even stronger. I mean the strong by calling the richest. So we are trying to dissect true global citizenship and citizens from the untrue, I don't know, false one or what, you name it, as there might be this section to the rich and middle class or the poor class. So that doesn't bode well at all. And I would say that that's the organization that often broach the issues of overpopulation or over decentralization, and possibly the most infamous slogan, "You will own nothing and be happy," as those are the things that have nothing in common with what the equality means around the globe. And don't forget that that's the meeting where teenage climate activist Greta Thunberg was a bigger star than the US president itself, and where CEOs and government ministers joined youth from around the globe and in Greta's climate march down the main street of Davos. So there might be maybe a reason, but just in a climate side. Definitely, the World Economic Forum is the most significant global gathering of corporate leaders and those with the resources to make a difference at the scale needed today. But governments seem more and more unwilling or unable to address the challenges we face without corporate leadership, power, and wealth. So we'll have a track on that. So right now, many analysts are competing with each other in terms of how to call the current situation we have found at economically. So I decided to put a headline: hard version of soft landing. I'm not really opt for this, as I think the hard landing will come up anyway, but it might not be a 2023, as this quantitative tightening may not got that bad as it seems, but 2024 is still on the table. World Bank cuts most 2023 economic output forecasts. If I extend this window, we can find it on 2023. The expansion of GDP in around the world will be at 1.7%, whereas China will get us to 4.3%. So it is very, very good one. So there is no recession on site on the but a mere slowdown. So how is it possible, we may ask? So it's possible that the supply side can help as the economy begins to rebalance in a more sustainable way. But I think the Fed is going to have a hard time banking fully on the supply side, given that a lot of the structural trends are just not very favorable at the moment. So getting back to where we were 30 years ago, there was slower economic development as something, the factor that has accelerated that economic development was globalization that gave us higher productivity. Right now, as there is defragmentation, we are flipping to higher growth and lower productivity, so both nominal GDP and inflation are going to be higher. But the question that I would like to pose: is there a scope for a big productivity increase? Right now, it's hard to say. It doesn't look like labor force participation is going to rise substantially, and we're on the flip side of a globalization period right now. So the economy is deglobalizing, and that may remain those inflationary pressures. But 2023 will be the year of a illiquidity. So there is less money in the market, means normally that means lower valuations. So during a similar liquidity drain we were going through during 1998, where LTCM has collapsed alongside 2008, where Lehman Brothers have bankrupted. So such an event like that triggers a fire sale. So may it happen this time? Yes, it may happen. Reserves of the banking system and major indices in the US right now has evaporated slowly but surely. We can find that there is a relationship between Nasdaq and S&P 500 and excess reserves, and those relationships are not accidental, definitely. So it's very important how much money central banks will pull from the market, but at the same time there are over $2 trillion in the reverse repo, which is a buffer for reserves. So if the Fed wants to, it can bring the balance sheet below 7 trillion from 9, and it brings a space for quantitative tightening to become a really, really huge. It doesn't mean that you would need to keep all your savings in a mattress now, waiting for a crash that may never come. But it's all about keeping the funds in liquid assets, in some type of liquid assets that, in the meanwhile, can earn something for us without a risk of a total drainage. What about the market outlook, you may ask? So right now we are in a very important place in terms of SPX right now. Let's switch it over, and we are opening right now the market bit above those this trend line. So it means the positivity is to push us forward. So the most likely path right now is that we will stop somewhere around 4100s, and right over after some of the stoppage will hike upwards. So it bodes really well. After that many touches, we have finally found a strength for the possible breakout, and it all depends on where the market will close. Will we maintain the close above 4,000 or not? That will be decisive. But it gives us much of a hope for that to happen. So right now, market outlook. What about the commodities, you may ask? So commodities have the strongest outlook of any asset class in 2023, JP Morgan says. So there is a very nice macroeconomic environment and critically low inventories for almost every key raw materials, especially with this China reopening, where lack of supply may be apparent in every single commodity market right now. If we just have a look at Invesco DB Commodity Index Tracking Fund, we may find that those downward pressure is getting lower and lower with these angles of sell-off, indicating that some of the bulls may step in. That's why we would watch it very carefully, and you cannot come up with a bad concoction for commodities right now. We're heading next into crypto outlook. So into crypto, there was a very perpetual battle between Gemini and Genesis. So there are much more information that indicated Genesis has land, which is the company under the governance of digital currency group of Barry Silbert. The Genesis lent a $2 billion to bankrupted Alameda that right now been sued, and also Gemini has been sued, as we haven't yet had discovered, as Gemini has offered its clients some of the earning products that weren't registered by a Security Exchange Commission, and Gemini has landed Genesis some money. So Gemini is in a trap, Genesis is in a trap. So there is a domino trap going on, where U.S. regulators are announcing that Genesis and Gemini broken securities rules. So right now there are some things that were going under the table where Barry Silbert haven't acknowledged that and admitted that that kind of borrow took place, but Gemini is insisting Genesis to confess the truth. Right now, the things are getting quite shaky right now in terms of that space, but market doesn't care. So it means that normally when the things doesn't indicate to be positive for the market, but the market says the other, it means we need to listen to the market. For the continuation of the issue, we'll get you updated in the next episode, hopefully. What about the Bitcoin cycle? So recently we've seen that the supply of the world's largest cryptocurrency will be pinched off in 2024. That's the projection out of Bloomberg, where we can find that right recently Bitcoin has formed a golden cross where 50 EMA has crossed with 200 EMA from the downside, so it means it gives us power for further growth. Recently, something that happened as that was back in March of 2020 too, but that was the one thing that lasted just around 2 weeks. So if it happened differently this time and will last for longer, it would give much more acceleration for bulls to step in. Right now, the market is facing seller exhaustion, and what we can find is there is still a lot of froth in the marketplace, but the investors continue to act in a much less bearish way than they speak. So listen to the market, listen to the heartbeat of the charts. What is next? Market movers. In terms of market movers, let's jump to um, events of a calendar. On Monday, we had a GDP growth rate out of China that's much better than expectations. On Tuesday, economic sentiment index out of Germany, and right now let's look at finally we are going to get better. So that's what those DE40 has discounted recently, is that growth in sentiment, in economic sentiment. Whereas inflation rate out of Canada is dropping slightly. Bank of Japan interest rate decision has remained stable at a negative pace against the what some of the speculations has already claimed to happen or speculated to happen. PPI and retail sales dropped out of US, but the market doesn't care, as we can find SPX is opening a very nice. So that were the things, and we are waiting Fed Beige book and football Bullard speech to take place. And on Thursday, building permits, inflation rate out of Japan, and on Friday, retail sales out of Great Britain. And right now we are jumping to market movers once again, but this time that will be earnings calendar. And we had on Monday United Microelectronics that were slightly worse than expectations in terms of EPS, but revenue was higher. Morgan Stanley right now is getting better, whereas Goldman Sachs worse. So Interactive Brokers has advantaged out of the volatility on the markets. For Wednesday, we had Carl Schwab that was slightly lower than expectations in terms of EPS and revenue, but on Thursday we are awaiting much more interesting companies alongside Netflix and Procter and Gamble. So that were the things around this, and we are heading back. How down will downgrades get? So while analysts have been busy slashing their forecasts over the past few weeks, the consensus for corporate profits in 2023 remains materially too high with or without an economic recession. So there are very positive expectations that may happen, but normally if we just put in a limelight this chart S&P 500 earnings tracker, we may find that normally those expectations are constructed in the way to have those stocks beat those expectations in order to push the valuations higher, to make the self-fulfilling prophecy, I would say, in terms of this feedback loop to perpetuate for longer. Recently, we had almost every time during recent 8 to 9 years the situation where those negative surprises weren't extended. The biggest one was the 2020, but I wouldn't expect that negative surprises will extend 25% as it was back then, and that's why I would find that those earnings will mainly to up over 75% beat those expectations. And as we will find in the meanwhile, Nasdaq 100 12-month forward earnings right now is heading above 10-year average, but aligning 20 points to equal with what was back in 2016, 2017, and 18, mainly. Yes, mainly 17, 18, 19. Sorry, not without 16. Right? What about the trade idea at this time? I would have for you a very interesting chart. Yes, I would say that SPX is in a very fine spot, but I would wait for the closing. In terms of Bitcoin USDT, right now we can find that there is no sign of a stoppage. So it means the market is very strong. There is a higher demand in terms of BTC, but I would at first just focus on WTI USD. Right now we are breaking out of this inverted head and shoulders. That is a highly I would say fulfilling pattern that giving us a high rate of winning, where there is around 60 up to 67% depend on the market chance of a fulfilling the objective that say where the objective might be set by setting a distance from a head to the neckline, and that adds up to where we are right now and where we might be heading next to 92.8. So if you are in a more defensive mode and more protective mode of your capital, you might wait for the pullback before 83 being attacked by or maybe at least that will be attacked at first and right after have a pullback, but afterwards we may see a much further. So I do expect the market to behave in a somewhat like this trajectory. Also, obviously, that may extend in time a bit longer to over January, maybe to February. But you may wait for the pullback like this. It's a kind of arbitrary set, as the pullback might be shallow as the market is getting more and more stronger. But I would expect that WTI USD would continue its march upwards. So always remember about setting stop losses in terms of a possible trade idea. That will be something like this in that scenario with risk reward ratio 3.86, so it's still decent. But if as I said, you may wait for the pullback. So remember about alerts, stop losses, about running your position carefully and not risking more than you afford to lose. So in this episode, that's it. Thank you very much for watching, and see you tomorrow, 8:45 a.m. East Time, live.